Hello everyone, welcome to QuantSap. Myself Vignesh. First of all, thanks everyone. Thanks for your valuable time. Thanks for joining me in this video. So today's topic is very interesting. Okay, a generic topic I would say, because most of us usually take a trade. Okay, most of us usually take a trade, and then when that trade doesn't go in our favor, okay, doesn't go in our way, we usually think, okay, now what to do? Shall I exit? Say for example, if the stock is hitting your stop loss, or say stock is hitting your target, whatever, but entry is still fine, but most of us are not able to optimize the trade that we have taken. Okay, we usually try to manage our trade, but somehow we end up failing. Okay, most of the time I see the retailers are not able to manage their positions properly. Okay, so it is very much important, like I would say, analyzing and managing your position, both are equally important. Most of us are good at analyzing the stock. Okay, unwinding is happening, xyz thing is happening, whatever, the stock is bullish, the stock is bearish, we are a good planners, but when it comes to execution, we are not that good, or you can say we are not that confident. So most of the retailers, I would say, are good planners, but when the execution point comes, they usually fumble. They are unable to execute their trade properly, or they are unable to manage their existing positions properly. So today's topic is all about how to manage the trade. Okay, so we will be covering few strategies, okay, and what exactly should be your view, how you are going to manage the strategy, everything we will cover. We will go and check one example as well. Okay, so this video is going to be very interesting. I request you to watch this video till the end. Okay, so first of all, if you are new to QuantSap and if you haven't installed the application, as usual, I would request you to install the application at the earliest, because as soon as you install, you will unlock the benefits of 25 free tools immediately. Okay, so you can definitely take the help of those 25 free tools, which will definitely help you to improvise your trading. Apart from that, if you want to know more about the paid tools, the paid version, what you can do is, once you install the application, simply go to the learn section, go to video library. So what is video library? Basically the banks of videos. Okay, so we have covered almost all the tools of QuantSap in multiple languages. Just filter it out in the language. English, Hindi, Marathi and Tamil are the 4 languages that we have covered. Okay, so you can choose the language as per your convenience, and you can definitely explore all the videos. And while exploring, if you have any queries, if you want to know more about the paid version, the paid tools, you can definitely reach us on the helpline number mentioned above. Okay, and we are here to sort all your queries out. Okay, so let's get into today's topic. Okay, give me a second. Let's start. So let's say this is trade management. Okay, a very important topic, I would say. So first of all, okay, let's say we will be discussing about bullish trades. Okay, if you are bullish, same thing you are going to go and apply for bearish trade as well. Okay, so let's say, okay, let's say this is a resistance. Okay, say call writers are, there are heavy call writers over here. Call writers are present at this level. Usually now if you see, the price moves like this, price hits this level, price again falls back, price tries to cross this level, but multiple times there is a possibility that it might fail. But say for example, it has given a breakout. Okay, at this level it has given a breakout. Now the next highest call writers, or say the next resistance as per the technical levels, is this. Let's say this is 100 rupees and say this is 110 rupees. Okay, so at this level, first the resistance, the stock was facing a resistance, and now I can see that the stock is having a next resistance at 110 levels. Okay, now being a retailer, whenever I see a breakout here over here, what I will do? I will go and buy ATM call or say slightly OTM call or whatever. Okay. So being a retailer, once I see a breakout, what would I do? Usually I'll buy ATM calls, okay, or say slightly OTM calls I will buy. Okay, and then I will wait for it to hit my target. But buying a naked call and exactly waiting for it to hit my target, how many times this kind of approach has worked for you? You yourself think about it. So mostly being an option buyer, especially being a naked option buyer, especially waiting for the exact target to be hit 90% of the time, I would say, or say at least 75% of the time, we will end up on the losing side. Correct? So how to manage this? Okay, say the breakout has come, okay, at this level, okay, the breakout has come and I have entered into a ATM call option. Okay, now most of the time, if you might have observed, breakout comes and then instead of going straight upside, what happens is it will move, it will retest, it will again move, it will give a slight breakout over this level, like this, like this. So there is a possibility that it might eat a huge chunk of your time, and we are all aware about an option Greek called theta. Correct? So that will erode your premium, that will eat all your premium. So despite your target being achieved, if you have bought an OTM option and say this target is achieved towards the fag end of the expiry, there is a possibility that you won't end up making the desired money. Okay, or else sometimes what happens, being a retailer, at breakout I straight away go and buy an OTM call, okay, say 105 or say 108 or 110 sometimes, and then it keeps on oscillating at this level and the entire premium vanishes. There is a possibility, these things happen. Okay, so even I was a beginner at one point in time, these things happened with me as well. So what I would suggest is, give me a second. So what I would suggest is, instead of holding the naked call till it is hitting your target, we are going to play it wisely. We are going to consider time and we will plan a trade, like how exactly to take a trade. Okay, so let's say a resistance, my target level. Okay, so let's say I received a breakout, I'll buy a call, naked call. Okay, I'll buy a naked call, say ATM call. I'll wait for 3 days. I will wait for 3 days. Now you can tweak this as per your convenience. You can make it 2, you can make it 4, purely up to you. Okay, I will buy a call and I will wait for 3 days. Now if the momentum comes, fair enough, I'll make money. If it starts oscillating, what will I do? I'll convert this into a bull call spread. Very simple. I will convert this into a bull call spread. Okay, say buying this call and say for example selling this call. Okay, sell OTM call option. Okay, you can go and convert it into a bull call spread. Okay, so because see, once you find a breakout, once you see a breakout, we usually think, okay, this can hit our target, but sometimes there is a possibility it might oscillate and it might end up like, okay, now this is not going to hit my target, now this is going to oscillate. We usually start feeling. So at that point in time, instead of holding this naked call, why don't you take the benefit of theta decay? Because we usually know that this is how the theta graph actually looks like. So initially if you see, the theta won't impact much, but as and when you are near to the expiry, the premium drops heavily because of theta. Correct? So what you can do is, you can go and sell an OTM call at that point in time and you can take an advantage of that premium. Like that premium might get 0 and your loss might get minimized. Okay, or else what you can do is, you can convert it into a ratio call. Once you are pretty much sure, okay, this 110 is now very much strong. This is not going to break. So buy a call, and after 3 days we'll convert it into a bull call spread. Okay, now instead of selling same call, okay, if you are buying one lot over here, we will be selling one lot over here. Now if you are extremely confident and we are very much near the expiry and you are confident that okay, this is now not going to break at all because the stock might oscillate over here itself, so there is a very strong call right, so this is not going to break at any cost. If that is what you are believing, instead of this one lot you can add one more lot over here, make it 2. When you make it 2, that is buying one ATM call and buying and selling 2 OTM call, this is called as ratio call spread, because the term ratio itself says the lot size is not going to be the same. I am going to buy one here, I am going to sell 2, 3, that depends up to you. So what you can do, you can go and sell a 2 lot. So either you can convert it into a ratio call spread or you can convert it into a bull call ladder. Now what is bull call ladder? Ladder always has a 3 legs. So this is how it looks like. Okay, this is like buy ATM, sell slight OTM and sell further OTM. That is currently 100 rupees. I am expecting the target of 110. So once I see a breakout at 100, what I'll do, I'll buy 100 call, I'll sell 110 call. If you are extremely confident that 110 is not going to break, convert it into a ratio call and sell 2 lot of 110. Or else what you can do is, okay, 110 is a strong resistance. Apart from that, I can see 112.5 is also a very much strong resistance. So instead of adding 2 lot over here, sell 1 lot of 110 and sell another lot of 112.5. So this is, you have created 3 legs. Buying 100, selling 110, selling 112.5. So this is like a bull call ladder, you can say. Now let us go and check out a practical example so it will be very much clear to you. Okay, let us take any example. Let me go to open interest first so that we can find out a stock. So okay, let's say PNB. Okay, and I hope you might be aware of this. So if you are not aware about the interface, like how exactly this open interest is to be studied, you can go and check out my previous videos. I have made a lot of videos on this open interest, but let me explain it to you in the brief. Now if you see, the current future price in Punjab National Bank is 112.17. So at this strike, if I see, the strike is 110, and if you see, there is an hollow green box. What hollow green box indicates? That is called unwinding. That is call writers are unwinding their position. So yes, definitely after 110, as soon as it crossed 110, I could have bought an ATM call. Okay, and I can also see an unwinding happening at 115. If you see, there is a slight hollow box. So let's wait for today's closing. So this box might get, you can say, there might be a further lot of unwinding, or else this might get covered as well, depends on the situation. Okay, so as of now I can see an unwinding, but I can see a strong addition at 120 and I can see a strong further resistance at 125 or say 122.5, whatever, it depends. Okay, so as of now one thing is clear, this is bullish. This is bullish because at 110 I can see significant unwinding, also at 115 I can see unwinding. Okay, so based on this I can see that 120 might come in Punjab National Bank. There is a possibility. Now I want to take a trade. Okay, we are already late because it is already 112.50. Okay, and the lot size is significant, so you cannot plan a trade now. If you are willing to plan, go with a hedge. Okay, so let's say it has crossed this. Okay, now what I will do is, let us check out the scenario for buying a plain say a plain naked call, a bull call ladder or a ratio call spread. Okay, so first let me go to trading and let me go to options architect, let me go to custom. Okay, so say a long call. Okay, a long call, and for expiry there are 13 days. Let's say I want to hold it till expiry. Okay, I have hold it. Now let us check out the P&L table. Now if you see, my break even is above 115. In a naked call, okay, a naked ATM call, my break even is above 115, somewhere around 115. Okay, if you see on expiry, if it hits my target, I'll end up making 41,600. The downside risk is 18,400. The risk to reward ratio is very much fair enough. There is no issue with reward to risk. Okay, now in this case my expiry is 115, but is it necessary that PNB is going to touch 115 or say 120? There is no guarantee as such. So to be on a safer side, say for example, I have taken a naked call on breakout. On breakout, I have taken a naked call and it is not moving for 3 days. What I will be doing? I will go and convert it into a bull call spread. So how will I convert it into a bull call spread? I will go and sell 120 call. Okay, now I have sold 120 call. See, this is a bull call spread. Now if you see a bull call spread, your loss has minimized from 18,000 to 14,800, and again your expiry is somewhere around 115, and now if it say touches around 120 levels, okay, if it touches 100, give me a second. Okay, so here if you see, yes, you can see the break even and expiry break even, you can see it is 114. So approximately 114, 115 is your break even, and this is how the scenario will look like. Okay, say further after say 1 or 2 days, okay, further 1 or 2 days, you are extremely confident that this is not going to happen, okay, that even 120 is not going to break. So what I said, instead of that, you can convert it into a ratio call spread, correct? Now if you see, this is a ratio call. Can you see? Now your loss is further minimized. See, this is how you are going to manage your trade. Now again, if you see, your loss is further minimized, and from 14 it has become 11. And on the upside, if you see, still if it is hitting your target, the profit that you will end up making is 48,000. The reward to risk has significantly improved, and your break even is again somewhere around 114. So the break even is staying constant. Now instead of ratio call, what I said, we can go for a ladder. Okay, so let me again reduce this quantity and let me add one more leg for a ladder, that is, let's say 122.5 or 125, purely up to you. I will sell this. Now let us check out. Okay, so in ladder, if you see, your loss is somewhere around the same, I would say 13,000, and your profit is again 46,000. So the reward to risk is still decent. And what is your break even? Again, you can say 114, 115 is your break even. So this purely depends on whether you are getting the momentum or not. So everything depends. See, as of now, standing here and saying, okay, PNB will go to 120 is very much easy. Plan these strategies. This is how you are going to manage everything. I know, like explaining the things and practically doing the things are very much different. I completely agree with you. I might tell you, okay, now the PNB has given breakout, go and buy. If it is not moving for 3 days, okay, you convert it into this, that, blah, 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 everything I can say. But at the end of the day, the one who executes the trade, he understands the real pain. He is, like, I would say, he's sitting on that. Okay, he's sitting on that trade. So it is very difficult to manage. I can understand, I know. But if you try, if you practice, these things are practically possible. So instead of buying and sitting on a naked call, which might cause you a loss of 18 to 20,000, you can convert it into a ratio call, or you can convert it into a ladder, and you can minimize your loss up till 11,000. That is what I showed you, and even the risk to reward is decent. So this is how you are going to do it for the bearish side as well. If you are seeing that a breakdown has happened and you are expecting a sharp downside, buy a naked put, wait for 3 days. No movement, convert it into a ratio spread. Okay, how we are going to convert it into a ratio spread? Buy a put. When you sell OTM put, first you are going to buy a naked put, and then you are going to convert it into a bear put spread. So that is buying a put, selling an OTM put. If you are extremely confident this is not going to happen, convert it into ratio. That is, you can sell 2 puts over here, or else one more put below that. That is a ratio. That is a bear put ladder, I would say. Okay. So I hope the strategies are clear. Okay, how you can manage a trade, I explained you. So if you have any queries, you can mention it in the comment. We will address it to. We will help you to sort out the query, whatever is the query. Okay, so I hope you enjoyed this video. If you liked it, I would request you to like the video, share, subscribe, comment. See you soon in the next video. Thanks everyone. Thanks for your valuable time.